Hi, Lynn. Good to see you again.
Hey, good to see you. Welcome back to your country.
Well, welcome back to you. We actually got to finally hang out in person. Did you enjoy Miami?
Yeah, it was a lot of fun there. Definitely. The whole kind of like that size of the event is not really my speed, but it was a lot of fun.
Well, it is mine. I'm a bit of an extrovert, so I like it. I thought it was pretty wild, though. It's so many people. Did you have a lot of people stopping you, saying hello? Did
Oh
you get
yeah, I definitely
spotted?
ran into that, especially on day two when I gave my talk. I think that kind of accelerated a little bit. So I definitely had a lot of people coming up. I was happy to see them.
Yeah, and you did your talk with Liz Starks. How did that go?
Oh, that went well. Yeah, I really like the work that she's doing over there and that, that the rest of the ecosystem is doing on the space. And so, I wasn't super planning on traveling around this time. But when she wanted to do that talk, I definitely, was happy to do it with her.
Well, it's an important talk, especially since you and I saw each other. We have the small announcement of a country making Bitcoin legal tender. So I actually went back out to El Salvador after Miami, so there's a lot happening there. But I guess there's a lot we can talk about there. I mean, as ever, I've got loads of questions for you, lots of things I want to ask you, especially to do with reverse repos, because that's something that people have been asking me about to ask you. But I really think it'd be a good place to start is with El Salvador. So just to kick things off, what was your read of the announcement? What was your initial kind of reaction?
I mean, that was actually pretty surprising news. There was buzz around the conference that, a pretty big announcement was coming. And I was like, I figured it'd be some sort of kind of, new rollout from the company or something. So I was pretty surprised by the actual news. I mean, it does make a lot of sense because if they're getting, remittances and they're paying a big chunk of those fees to, places like Western Union and Strike and other Bitcoin applications can make that more effective. By making Bitcoin legal tender, they can eliminate the whole problem of capital gains taxes. And they can start to implement that into their banking system more. And so it does make sense. I was also the follow up about potentially El Salvador exploring mining, using its geothermal energy. I thought that was actually equally as interesting. So especially with the kind of the hash rate migration that seems to be underway now.
Well, yeah, but could they not have just changed the laws to exclude Bitcoin from capital gains tax? That would have been a much simpler way to cover the remittance problem. Or do you think there was a? Do you think they had to make it legal tender for this?
No, I think you're right. There could have been halfway measures, right? So there could have been, basically excluding from capital gains taxes, but still not having merchants accept it. The problem there is that whenever when people receive remittances, then they have to exchange it for cash. They can't really use it too much, except for in
Mm.
maybe specific areas that happen, like Bitcoin Beach, for example. But this gives them more avenues, so they can either convert it into dollars or they can spend it on merchants right away. And I think overall that gives more access points where, I think ultimately a lot of people will convert those to dollars, but instead of having to go through kind of centralized areas, they can give it to a merchant and then the merchant can, do the conversion on their behalf. And so there's basically gives people kind of maximum flexibility about it. The whole part about merchants having to accept it is one of the more controversial parts. But at the same time, the country said that they would basically provide training and provide ways that more merchants can accept it, and then if ultimately they can't, right? If they don't have a smartphone or something, then they're excluded from that.
Right. So I'm going to do what I normally do with you, Lynn. I'm going to assume you know everything, and ask you some of the things that like questions I've got on my mind. And if I push you into areas that you don't know, but you pretty much answer everything I've ever asked you. So to begin with, I wanted to ask you about the reality of being a dollarized nation. Not what is the reality of a country not having its own sovereign currency, like the pros and the cons. Because the basics that I have been told is that it's great because they get to have a stable currency, which is quite rare in that region of the world. You know, we know everyone knows what happened in Venezuela, but we also know Argentina itself and other countries have had quite high inflation rates, so they get the benefit of a stable currency. But not having their own currency, there must be a number of drawbacks as well.
I mean, yeah, in some ways it's kind of like relying on a gold standard, but messier. And so basically, they're relying on a currency that they cannot print, right? So they're
Mhm.
reliant on getting those from the United States. And so as you point out, there are some advantages, right? So you don't get devalued quite as quickly, right? You still get devalued, but not as rapidly as most emerging market currencies do. On the other hand, if there's a liquidity crisis, right? So their central bank cannot create new ones. If they denominate some of their debts in dollars, right? So if there is basically a dollar shortage, they can't service those debts. Also, because the country's so reliant on, part of how it gets dollars, if you're a country that either has dollar-based debts or is a dollarized nation, you rely on exports or remittances in order to get dollars, right? And so some countries could be, say, oil nations, and they export oil. Other ones could have other commodities or other types of goods. And for this one in particular, they're heavily reliant on remittances. And so when it basically gives them a lot of exposure to things like a pandemic, obviously, but then also just any sort of recessionary downturn that could leave a bunch of El Salvadorians in the United States unable to send remittances, or having to reduce the amount of remittances they send because they lost their job or they're otherwise more economically stressed. And so it's basically a mixed bag. And I haven't done, I certainly don't know everything, and I have not done a super deep dive on, say, El Salvador's economic workings.
All right. So when you said there that they're protected from devaluation of their currency more than other countries, are you saying that as the dollar devalues, that accelerates the devaluation of other currencies?
Not necessarily. The dollar can devalue in a vacuum. It just happens to be that most emerging markets, because they have faster population growth, they have faster money supply growth, more bank lending. That they're more prone to their currencies going down at a faster rate than the dollar. So if you look at a long-term trend of a basket of emerging market currencies, it gradually loses value against the dollar and against the euro or the Swiss franc and these other kind of larger currencies, but it's not in a straight line, right? So it goes in cycles. But in general, for example, if you look at, say, the Indian rupee, and that's not exactly a country that's had, say, major currency crisis in recent years. It just kind of is this generally more devaluation currency. That basically there's the exchange rate kind of weakens over the long run, and that can be accelerated for countries that have a lot of dollar denominated debts, right? So say you're in a relatively poor country, and sources of capital outside of your country want to invest in your country, they're unlikely to give you loans in your own local currency. So instead, they'll often do dollar-based loans, or to a lesser extent, euro-based loans. Maybe depending on where they're from. But for example, China will do dollar-based loans to countries in Africa, for example. And so it's not necessarily that they're using their own currency, but they're using generally one of the top, two currencies. And they'll make a loan to these countries, and it could be to their sovereign government, or in, say, Argentina's case, or it could be towards, their corporations, as in Turkey's case. And so that country now has uh, debts in a currency that they cannot print. And so, if that currency rises substantially while their local currency devalues, they can run into major issues. It's kind of like if your revenues denominated in dollars, but your debts are all priced in gold. You'd have a big problem if gold were to appreciate against the dollar, if the dollar were to devalue against gold, right? And so they kind of, some of those emerging markets face the same sort of problem, where they have a natural tendency to devalue. Now, there are some exceptions. Ones that kind of there are some emerging markets that went through serious problems in the past. Like, for example, during the Asian financial crisis in the late 90s, Thailand was kind of at the epicenter of that. So they had a big devaluation of their currency. They didn't have very high exchange reserves, but they, over the next 25 years, they really learned from that lesson. And so Thailand built up really big foreign exchange reserves, and so they've actually had one of the most stable currencies in the past decade, for example, and they haven't really had that persistent devaluation against something like the dollar, whereas you see basically India going through, or some of these other countries going through, and every country has their own dynamics.
So, what is the reality of the impact on the country in terms of raising money? Because we've discussed a lot in the past about using bonds for raising money, and I've come to understand like the strength of the currency impacts the rates at which you can borrow, and also because of you get different the ratings agency rate the currency. But if you're a dollarized country, if you don't have a sovereign currency, you don't have the ability to raise money in the bond market. Or is that not
Well, you
true?
if you're a country that's not a sovereign, you don't have your own currency, you can still raise money in the bond market. I mean, an example is all those the eurozone countries, right? So Greece does not have its own currency, but it raises money in euros, and so the euros are the shared currency of multiple countries, and so. All these other types of countries, if they don't have their own currency, they can still raise capital. I mean, El Salvador does have bonds outstanding. I assume they're dollar based. I haven't actually dived into their capital markets, but they do have bonds outstanding, and that's common in emerging markets. Well, they'll have bonds denominated in dollars or euros or sometimes in their own currency as well. It depends on how developed that market is.
So I guess how those bonds then would be graded would have to consider two things. One, the stability of the currency. So if they're issuing bonds which are dollar based, then obviously that's a relatively stable currency. But at the same time, there would be a separate consideration for how good El Salvador is at paying its bonds back.
Exactly. They would look at things like how much debt they have relative to GDP. They would
Mm,
look at how much debt they say they're dollar based. They would look at how much debt there is relative to dollar inflows. So it's kind of like a debt to income ratio sort of type of metric. They would look at past default history. I mean, if a country has a serial defaulter, obviously they're gonna have less benefit of a doubt there. There's also economic instability or political instability. If you don't know who's going to be in charge in next year, right? And there's no kind of say strong institutions of kind of reliable governance. Countries would have lower ratings, and you see that, for example, in say Russia, for example, where they've actually have pretty strong finances. When you go down, they have their own currency, but they're say they have very high reserves, they have very low debts, and but their credit ratings are not super high. I mean, they're not bad, but they're not super high because Russia did default back in the 90s. It was, by then it was, less than a decade old in its current, political formation. And they've come a long way since then, and the rating agencies have recognized that. But even though their financial metrics are actually quite sound, their ratings are a little bit lower than you'd expect from just looking at the numbers because they're kind of getting a Russian discount, right? You're getting some
mm.
political risk, corruption risk, sanction risk, economic concentration risk, and just the fact that it's still classified as an emerging market, and so it still has that more recent history of currency turbulence or default.
So in the bond markets, I've talked a lot to you in the past about hedging your investments. I'm a moron. I only have Bitcoin. You're smart and you hedge your investments across multiple different asset classes. Within the bond market, do people tend to hedge across multiple countries then?
I mean, it depends. Yeah, if you're in a developed market, right? So say you're an American bond investor or a British bond investor. A lot of times they're just concentrated in their own country, right? So same thing with say stock pickers, right? If you're running a mid cap equity fund, in America, you might just be picking American, mid cap equities. Same thing for bond managers. Generally, if you are an emerging market bond manager, usually you have multiple country exposure at that point, especially because emerging markets can go through major cycles, and so there could be periods where one country is just not a great lending environment at the current time. And so by having multiple countries, you can kind of go to whatever needs lending or has the best risk adjusted returns based on your assessment. And so the broader they can be, it's kind of a trade off. I mean, the more specialized they are in a few markets, the more they can maybe get that market right. On the other hand, they want a handful of markets that they can kind of rotate capital to based on what's going on.
And in terms of the US, I'm going to assume there's a benefit to other countries being dollarized, both not just in terms of supporting the currency, but also for political reasons.
Well, I mean, there are basically countries that are dollarized are either generally very small or economically tied to the United States, or they lost their currency before, and so they tend to those types would be on the more impoverished end of the emerging market spectrum, right? So they would actually not even be
Mm.
classified as full emerging markets; they'd be more like frontier markets or other classifications, and so the big challenge there is just all of their circulating currency therefore is reliant on an external country, the United States, that could choose to sanction them and block dollars going to them. That basically could tighten, and change monetary policy. Right? They're relying on an external, centralized, source of monetary policy. Uh, you know, It's not like they have, say you back your currency by gold, you might have some gold mines in your country. You can literally mint money. Whereas if you're El Salvador and you're relying on dollars, there's nothing you can do to kind of mint dollars locally. You have to either sell exports to get dollars, or you have to get remittances. And again, you could be sanctioned. So now you're basically subordinate to this other country. You've given up some degree of your sovereignty because this other country can just literally shut you off from your money source at any time. And so there are a lot of drawbacks, but it's kind of it's kind of a fallback option. If countries start to lose their currency, it gets weaker. You start to generally see black markets develop for dollars or euros. So it's for them, it
Mm.
becomes a harder currency. And then if it fails completely, you can have a period, or in some cases a more permanent stretch of just the country just literally kind of gives up and just reverts to using the dollar for the foreseeable future.
So would Argentina's dollar market be considered a black market?
Uh, I mean, they certainly do have basically the exchange rates there on the black market are different than the official exchange rates. I haven't been there in maybe 7 years, so I don't cover that super closely. But for
Mm.
example, in Egypt, people certainly generally often appreciate sometimes having dollars, right? It kind of they don't mind getting dollars. Because the exchange rate can differ from the official exchange rate. That was especially true about 5 years ago. Egypt broke their peg, and so around that time, there's a big gap between like the black market exchange rate, which is essentially the real exchange rate, and the official exchange rate. And so you see that kind of popping up in different markets where what the government says their currency's worth is not necessarily what people are what supply and demand are dictating.
Yeah, I've experienced it in two countries. So when I went to Venezuela, I experienced going to a restaurant. Everything was priced in the bolivar, but they wanted paying in dollars if you could, and they would recalculate the price for you. But I also had it in Cambodia. I mean, I expected it in Venezuela. I went there expecting it, but when I was in Cambodia, I wasn't actually prepared for that. But people wanted the dollar, and they had this strange thing whereby they would inspect the note, and if there was any blemish or tear on the note, it would be rejected.
Interesting. Yeah, I'm not sure
Yeah,
why.
yeah, I've got no idea why, but it was a really interesting experience and a chance to trying to explain to my children the benefit we have of a stable currency in our country and why people might want dollars in different countries. Okay, so have we ever experienced, or has there ever been an incident of a dollarized country being shut off, being sanctioned?
Not my knowledge, but there are. I mean,
It's a
yeah,
threat.
it's a threat, and it's something I don't know. I mean, there are countries that get cut off all the time, right? So I mean, Iran's been a constant source of sanctions. They're not dollarized in the official sense. Um, so there are a long history of countries that get cut off from the rest of the world, due to sanctions. North Korea, Iran. But then you have like softer versions of that, right? So you have, for example, you know, Germany's was working with Russia to build a pipeline between them, and so both sides wanted that, and the United States was threatening sanctions over that, right? And so
Mm.
that's an example where you don't have to be as crazy as North Korea to be on the risk of getting U.S. sanctions, right? You can just be doing things that for whatever reason the United States is not thrilled with what you're doing, and that stick of sanctions is always there, and so there might have been cases of that's basically it's one of those things I don't know. There's a
Mm.
lot of small countries that use them, and so I wouldn't say no, but I'm not sure.
There's another question I've got. This probably is slightly unfair, but do you know much about the process of a country becoming dollarized? Because one of the things that was crossing my mind when I was there, I was thinking about, it's like, how do you go through the process? Because suddenly you need an injection of enough capital into the country. You need to ensure everyone has dollars. I don't know if that's anything you've ever looked at, but it's certainly something I'd be interested in. And it also makes me think about, do they don't have the ability to print the currency. Do they have to keep track of how many dollars are in the country? Do they have to keep certain reserves? How does the banking infrastructure work? What happens if there's too many dollars leave the country? How do they ensure they have enough of a circulating supply? Are those things you've ever looked at?
I'm actually curious to those questions myself. It's not something I've deeply looked at. It would probably be very hard for them to track how much currency they have because a good chunk of it would be physical in their case.
Mm.
So in say the United States, most dollars are in the banking system. They're easier to track. Only a minority are physical. The same would be true for euro or British pounds in their countries. Whereas if you're talking about an emerging market, a big chunk of the dollars there would be physical, and so that'd be harder to track. And so, yeah, that's a really good set of questions, and I'm not sure how they go about it. And I've actually thought of that myself. It's just not an area that I've done a lot of research on. There are emerging market economists that could probably answer those questions. I mean, if actually the Bitcoin critic Steve Henke,
Oh, that
he'd
guy.
actually I bet he could answer those particular questions very well.
I might approach him. I just can't tell him that it's for a Bitcoin show because he's not a big fan, and he's also he's a bit of a bullshitter as well. I've been tracking some of his tweets. He was talking about the remittance market. One of the interesting things is he was criticizing Bitcoin as remittance to El Salvador because you have to sell it back on the exchange, but he completely missed the point that actually you don't. You know, you have got the situation. Yes, it's small in El Zonte, but in El Zonte, you don't actually have to sell your Bitcoin to get dollars. Almost in every location, you can spend your Bitcoin. So that comparison whereby it's actually more expensive than remittance because you need to sell to the exchange is actually false. And it's one of the things I'd like to talk to him about. Are you thinking of visiting at all?
El Salvador,
Yeah,
not in the near term, but it might be neat to try it out eventually.
it's so good, Lynn. Honestly, I've been 4 times now. I really want to get back there. You've got everything there. You've got it's relatively cheap. You've got great food. It's sunny all the time. You've got the beach, and now obviously a Bitcoin project to track. Okay, so a few other things I'm thinking about with regards to El Salvador. So when you heard they were essentially they're already a dollarized nation. They're essentially a Bitcoinized nation now. One of the things that was on my mind, thinking about why they may do this and why they may have forced people to accept Bitcoin, and one of the things I was thinking about is that they've created this policy whereby if you spend 3 Bitcoin in the country, you invest 3 Bitcoin, you can get you can become a what do they call it? Not citizenship. Why can't I remember what it is?
Permanent
Residency.
residency.
Yeah. So if you invest 3 Bitcoin, you get permanent residency. And were you in the spaces where they joined the Twitter Spaces?
Not that one, but I
Oh.
saw the general kind of notes afterward of what was said.
So what was interesting, they said you just have to invest 3 Bitcoin, and it's not a fee you pay to the government. It's just investments. You can buy a house, a car, and a property. And they said it doesn't matter what happens to the price; it'll be 3 Bitcoin. And so one of the things I was thinking about is it appears they're trying to do is have an injection of Bitcoin into the country, and that will be circulated or held by people. But if Bitcoin continues to perform as it does over the next 5-10 years, that Bitcoin held in the country will increase in value relative to the dollar, which will raise up the net wealth of the country. So that was my interpretation of why they're doing this. I'm assuming you have your own interpretation.
That'd be my interpretation as well, and that goes back to your previous question of if a country is going to dollarize, how do they get dollars? How do they ensure they have enough dollars? How do they track dollars? And so, if you're kind of seeing a country Bitcoinize, one of their initial things, they have some Bitcoin from Bitcoin Beach. They can get remittances, but they probably don't have a ton of Bitcoin there. You know more than me, how much Bitcoin they might have, but whatever number they have, they almost certainly want more, especially if they want more merchants to accept it. They want to have it, grow in market share a little bit and be more commonplace. And so it's natural that they'd want to get more Bitcoin there if possible. It's also basically a way to, have another. Basically, they've diversified their monetary base a little bit if they can kind of get Bitcoin up to a meaningful share against the dollar. And even going back to your other question about has there ever been a country that's dollarized and cut off from sanctions? One thing that comes close, and actually this is relevant for El Salvador, is the IMF. And so basically, a lot of these emerging markets that take out dollar-based loans and debts, when they run into problems, because inevitably, if they end up having a lot of dollar-based debt, there's usually some sort of cycle of a dollar strengthening cycle or a recession where they end up having trouble servicing those debts and they need dollars. And one of the major purposes of the IMF is they have essentially this big basket of dollars, and they can go around making these additional dollar-based loans for more instead of pure investment purposes. They're more strategic purposes, and they can say, "Hey, I see you have a problem there. We can go ahead and give you dollars or loan you dollars. You'll of course pay them back, but in addition, we will dictate parts of your fiscal monetary policy as we see it." And so we're basically, that's an example of a country ceding additional control over some of its own sovereign choices because it's relying on dollars and therefore because it's relying on, say, the IMF for a bailout. And so that's actually kind of an intermediate case where they may not be sanctioned from the dollar, but there is an external organization that has a lot of control over them, basically dictating parts of what they can or cannot do.
How does the IMF operate? How does it raise its own money that it can issue for bailouts? How is it governed? I don't know too much about it.
I mean, that was established decades ago. Kind of is kind of part and parcel with the petrodollar system
Right.
and the Bretton Woods system. Really, this whole modern era of dollar dominance. And so that's basically just there's multiple countries that are involved to ensure that it's funded, led by the United States. And so you have these institutions like the World Bank or the IMF that are basically they're almost like error correcting mechanisms for the system, right? So the system on its own is not super well designed, it's not super sustainable, it's not very self correcting, right? And so a lot of these countries they get dollar based debts, the dollar strengthens, and then they default on their debt, and then there's a big economic crisis. And so these institutions come in and they say, okay, we can give you that loan, but you have to change this, and it kind of softens the volatility a little bit, but it also in the long run makes these countries kind of more reliant on these external organizations.
Yeah, that's what it appears to me because the only time I ever tend to hear about the IMF is when it's bailing out other countries, but it always appears to be basket case countries. And I just keep wondering, it's like, do they ever get this money back? Does it even matter?
I mean, yeah, they do a large number of small projects, and a lot of those individual projects do get paid back. There are others that do outright default a number of times, like say Argentina, for example. And so it's kind of like the cost of doing business, right? So it's
Right.
basically it's almost like that's a way for the United States and some of these other countries to extend their reach, and this is a cost that they basically absorb if needed. But the IMF also does things like it publishes research and does things like that. But yeah, the main kind of purpose we always see in the headlines is the IMF doing bailouts or dictating policy to various countries.
Because we're seeing that hostility towards this Bitcoin decision from the IMF and the World Bank. And it does make me think of, I'm not sure if you listened to my interview with Alex Gladstein about the petrodollar with him and Nick Carter, but he raised this idea that potentially the second Gulf War was to do with Saddam Hussein started selling his oil for euros over the dollars. And he said there's never been a real explanation for why that war happened. But if you actually look at the money, if you follow the money, it was not long after Saddam Hussein did this. Was this? He asked the question: Was this a war to protect the petrodollar? Conspiracy theorists would probably say yes. I mean, I don't know either way, but I guess El Salvador adopting Bitcoin is a threat to the IMF and is a threat to the World Bank, especially as other countries are signaling their interest. We've had this wave of countries signaling Paraguay, Panama, uh, Ecuador, Brazil, Mexico, Tonga, Honduras, the potential bills being submitted in both Panama and I think it's Honduras and Paraguay in the short term. The guy from Tonga is speaking quite regularly on Twitter Spaces on Twitter about this. He actually mentioned that 45% of the country's GDP is remittance by
Wow.
introducing. Yeah, wow! Like that was a massive wow because he talked about. I think he said if they move remittance to Bitcoin, that would add an additional 40 million to. I can't remember if it was 40 million to the GDP or actually 40 million in terms of like tax receipts for the government. I think it was the latter. And I'm interviewing this week, and I'll ask. But as we see like a whole load of countries signal for Bitcoin, I guess this is a threat to the dollar.
I mean, in a sense, yeah. And so, I mean, from the IMS perspective, it's hard to read exactly what they're thinking. I mean, I'm sure that there's some economists there that haven't studied Bitcoin or they're skeptical on it, and they're said they could be naturally worried that if Bitcoin's volatile or loses value, that it could be bad for El Salvador. On the other hand, I do think there are other ones that are maybe have the opposite concern that
Mm.
Bitcoin could do well. and that therefore it basically impacts the kind of the global monetary order that's been in place for a while. And this, I actually I mentioned before I had my own kind of petrodollar article back in December of last year,
Yep.
and I did talk about that the kind of the Iraq connection, and it is hard to assert this happened therefore this happened, but basically the reasons given for the war ended up not being true. It is also true that they basically did switch to euros shortly before then, and the highest stage where this was kind of this idea was put forth was by Ron Paul in Congress back then. He basically gave this speech in Congress that I linked to in my article, where he kind of talked about this connection. And so basically, there's not been a great track record of. So there's all sorts of dictators in the world, and they tend to get left alone. But if the dictators kind of mess around with the money system, that's when they tend to attract the you know some of the ire of these external sources. Let's, I guess, put it there.
It's quite sinister, though. It's, yeah, I don't know. It's weird. What other things have you been thinking about with regards to El Salvador adopting Bitcoin? The because it's a risky thing. I interviewed the president and I had a meeting with him beforehand, and I said to him, "What can the Bitcoin community do?" And he was very clear. He said, "Look, this has to work. I've got a very high approval rating, but if this is a failure, I'm done. My rating could drop." There's obviously many benefits should Bitcoin continue to be successful, wider adoption. They could become the MicroStrategy of companies. But what are the other risks or trade-offs that you've been thinking about with regards to this?
Well, I think one of the big risks is just the volatility.
Hmm.
So one of the criticisms of Bitcoin, and why it's maybe not the ideal legal tender, is that it's highly volatile. And so as problematic as the dollar might be, it's generally more convenient to have, say, prices listed in dollars, because they're not going to change week to week in most cases. Now, for example, lately we've been in a more inflationary cycle, so we see prices going up. But in general, these kind of more managed currencies have these kind of periods of stability. And whereas something like Bitcoin, because there's no safety nets, there's no kind of triggers that can shut it off if it goes down a certain amount. It can be highly volatile, as we're seeing today. And so, for example, I think one of the risks there is that you could just have people maybe not want to accept it on a wide scale, right? And it just kind of they're basically given the option and they don't pick it for one reason or another. I think also we saw, for example, some of the risks where that could open the door to other altcoins coming in. Like we saw some now it's kind of a bed for kind of scammers, right? To go in there and say, "Hey,
Ooh,
I see you like Bitcoin, so here's like
my shitcoin.
exactly." And so I think that's a big risk. And then, two is just that it just kind of, for whatever reason, just doesn't work. Maybe they don't attract enough capital. Maybe they don't really, they put a lot of work in. It just kind of, doesn't change a ton. But overall, I'm pretty optimistic on it. I think that their reasons for doing it are understandable, in the sense that they are getting a lot of remittances, and this is, a more efficient way to do it potentially. And then two, if they end up attracting some capital based on that they're if people can invest through Bitcoin and get residency and maybe build a business there, or just kind of come in, improve the real estate, improve more local businesses. It is a way of attracting capital, at least a potential way of attracting capital. It remains to be seen how much they'll do it. I've even seen online a number of people, because they want it to succeed there, they're willing to give just free donations, right? So they're not even trying to get residency. They're just willing to kind of, send some sats over to local businesses. And the cool thing about it is, you know, with charities, if you're trying to give international aid, it's always been challenging, because you don't know how much your money really gets through to the end goal. You don't know how much gets lost in the way. There's tons of corruption. Even if there's not corruption, there's well-meaning people. There's friction. And whereas if, say, a local business just they can have like a code, they can have their address, and basically people can send sats directly to local businesses, or local people. And so it's basically a different way of doing aid that is potentially more effective. And I'm sure Alex Gladstein can talk more about that type of subject. So overall, there are a lot of kind of benefits that they could get from this. And so, but there are risks of relating to the volatility, the opening for altcoins, things like that.
Yeah, I just did a little Google. The global remittance market size was valued at 682 billion in 2018 and projected to reach 930 billion by 2026. So there's a real incentive to move to a remittance market which has low fees, instant transfers, solves a number of problems of the traditional remittance market. You could see how if El Salvador, I think it's 15% of their GDP is remittance, if a large percentage of that moved over to, there's two sides of the remittance. There is the just using Bitcoin itself, but there's also the strike side, which is sending synthetic dollars over the Bitcoin network. If by moving to that, you can increase the size of if you can increase the GDP of the country because you're removing fees, you could see the case study being something that just spreads globally. And I'm wondering, as more countries adopt Bitcoin, do they become stronger together? Do they form coalitions? I mean, I saw that the Development Bank of South America, I can't remember the actual name, is supporting El Salvador in its rollout of the project. And that group, that development bank, supports 14 countries, as I believe, and even includes South Korea and Taiwan, which I didn't know about. I don't know if you're aware of any of that, but it just feels like if they get this right, this could be the first domino for a number of countries.
Yeah, I mean, it was. I think one of the more interesting pieces of news after the volcano mining, of course, was
Yeah, we'll
the
get onto
number.
that.
Yeah, like the half a dozen other, political leaders from other countries that also express similar interests, and they might have, they can't move as quickly as this country can because they don't have a president with that much approval and that much kind of control over legislature and stuff. So for better or worse, but they can have a politician there that's kind of raising it in Congress or getting it on the radar. And yeah, I think it comes down to, watching it be, either successful or unsuccessful in El Salvador, and that could influence other nations to move ahead. Um, and I think it's, we have to be careful about reading too much into it. So, for example, when MicroStrategy bought Bitcoin, that wasn't, so far there's not been, say, a flood of other companies, putting. Obviously, none of them have really done what MicroStrategy did, where they put most of their reserves into it. There's been a handful that put a small percentage of their reserves into Bitcoin, and so that was, that wasn't the start of some floodgate. Now, maybe looking back 2 years from now, it will be, but it's not like a year later there's a floodgate. And so I think it could be the case that El Salvador remains kind of the only one for a little while, or that other countries, maybe some of these other ones start dabbling to some extent. But it's there's kind of certain conditions that make them ripe for it. So one is countries that are already dollarized, and that are already relying on remittances. Those are the ones that are at most probable of trying something like this out. And so I think at the very least, it makes sense for all of them to call, Jack Mallers, and basically say, how can we cut our remittance fees? Because as you point out, if you have hundreds of billions of dollars per year in remittances flowing around, that's tens of billions of dollars of remittance fees, potentially over 100 billion eventually. And that could be reduced to near zero. And that's very impactful for people that are sending small amounts, for which those percentages make a world of difference.
Yeah. Well, yeah, Michael Saylor's in an advantageous position when they made their first move at the start of a bull market. So they're in a very good position in that I think it was like his original buy of that first billion or so, or whatever it was an average price of around, I think it's around $11,500. Yeah, he's in the green. It's easy for him to make future decisions. You look at Tesla and Elon Musk, their initial buy is now in the red. I think their average price was 35,000. So I think MicroStrategy is in a unique position. I think other companies having a minor amount of exposure, is advisable or is something they can consider. But to make a move like MicroStrategy has done, and especially after the recent drawdown, I think it's a slightly different position. I'm going to come onto that because I've got a MicroStrategy question for you. But there's two other things I want to cover in El Salvador. Okay, so you did your presentation with Elizabeth, discussing the Lightning Network. One of the most interesting things about El Salvador is that my expectation is the majority of day-to-day usage will be on the Lightning Network. The Lightning Network is integral to this, whereas historically, the majority of Bitcoin being used, by my experience, has been on the main chain, and moving relatively larger amounts. We're not moving $5, $10. It's thousands or thousands. I have been using the Lightning Network when I'm in El Salvador. I turned up on the most recent trip without any dollars, and I didn't care. I did end up using the ATM because I've not used one before, but everywhere I go, I know accepts Bitcoin. So I was just paying on the Lightning Network. And the Lightning Network is super important to this. You've been doing some work tracking the Lightning Network, tracking the growth of the network. What can you tell me?
Yeah, I mean, over the past, it must be 7 months now, I've been paying particular attention to the Lightning Network. And so, when I first wrote about Bitcoin in late 2017 and kind of passed on it, then revisited in early 2020. And so I wrote a series of articles throughout kind of early and mid 2020 about Bitcoin. And then really kind of as I got some of that core stuff out of the way, I increasingly shifted my research towards Lightning Network because that was an area that, in my view, was not getting enough attention compared to what the potential was. And then moreover, basically there are signs, when I started writing it, say 6 months ago, 7 months ago, pointing out that I think it's kind of a sleeper hit, right? So I think it's something that's not getting a lot of attention, but it's really starting to reach critical mass. We're really starting to get these killer apps for it. And it's one of those things where, building out Lightning's a process. I mean, it started as a white paper in 2015. Then they had to do, a set of kind of standards so that different companies could implement Lightning and have them, be interoperable. Then the SegWit update on Bitcoin allowed Lightning kind of to be actually built. Then from there you have no liquidity, right? Because Lightning is all about liquidity, number of channels and nodes. Basically, some degree of network effect has to start from virtually nothing. And so you had a couple years of building that out. You have companies like Lightning Labs that are then they're building tools so that these other apps can then come and start using the Lightning Network more effectively. And so that's, looking back about, the beginning of this year, Lightning kind of started to reach critical mass where it was pretty usable. Someone could send a reasonable amount of Bitcoin over it. And that basically, liquidity was high. And then when you see things like Strike Global, they're actually starting to use them for specific purposes like cutting down remittance fees. That's getting pretty interesting. And so I started covering that space. And I do think that, one of the whole takeaways from the Bitcoin conference was that Lightning has reached critical mass, right? So it was used for, streaming stats from gaming. It was used in auctions, and then now, of course, the El Salvador news. And so I think it's at the point where, if you look at overall Lightning capacity, it's really accelerated lately. So how much Bitcoin, that network can support. And it's one of those things where the numbers might not be as large and exciting as, say, some of the DeFi projects, because Lightning is inherently not about gambling. It's not about casino type of coin trading. It's about building out a payment network. And so it's been that kind of slower, longer grind to really kind of lay the foundation rather than something that, just kind of, went up straight in a straight line.
Yeah. Okay. So we need to talk about volcanoes. I did a show with my friend Harry Suddock the other day, trying to learn a lot more about the energy sector, how energy moves, etc., etc. And we covered everything. We covered nuclear, solar, we covered hydroelectric, we covered coal, we covered everything. The one thing we never covered was geothermal, which just didn't come on our radar. And about 2 days after we recorded came the announcement of volcano mining. It's something that just never even crossed my mind. I just didn't even think about it. And it's become this beautiful meme online. People are adding volcanoes into their names on Twitter. But it's a really interesting idea. But the thing that I'm most interested about is this idea of volcano bonds. It was something Jack Mallers raised. Have you looked into those? Do you know much about them?
Not into those, but basically, I mean, I know the basic idea is essentially that that's another way of them raising capital,
Mm.
and you can collateralize it by you have access to this revenue now, right? So instead of just kind of lending to the pool of El Salvador's government, you're lending to something that's collateralized by certain revenue streams or certain assets. And there obviously would be different ways to structure that, but that's certainly a possibility. And there'd be Bitcoiners out there that'd be happy to buy those even just for the lulz. Um, uh, and it's the idea. So the idea of geothermal is actually really important because an example would be Iceland, right? So they have a large geothermal component to their energy, and so by extension of that, they have very very low energy costs. And so but there's a trouble there. So say generally you want to export things you're really good at, but it's really hard to export electricity, right? You can only
Hmm.
go a few hundred miles. So one thing that they do is aluminum, for example, is very it takes a ton of electricity to refine it into its final form, right? So you get the aluminum out of the ground, but it's kind of mixed up, and you have to use a ton of electricity to separate it and get it into its final form. So they have an industry where a lot of people, like a lot of places in the world, will ship their ore to Iceland, and then they'll use their super cheap electricity to refine that into finished aluminum and ship it back out. And that's basically a way of essentially exporting their electricity, their surplus cheap electricity, without doing it literally. And so, basically, Bitcoin mining is another potential way where a country can, if it has, for whatever reason, some sort of super abundant electricity. It could be that they're unusually good for hydroelectricity. It could be that they're unusually good for geothermal energy. They have some of these super cheap sources that are renewable and long lasting. They can say, okay, we're going to go ahead and use some of that to mine Bitcoin, or process aluminum, and that's one of the ways that they can raise revenue. And so that actually, in addition to people potentially going into El Salvador with 3 Bitcoins, and investing them there, that actually, that volcano mining, that geothermal energy, could be a pretty meaningful source of revenue, if they get some serious, miners on board that know what they're doing and, make that work.
And I guess the state could mine themselves, co-located at the location of the sites. And as I believe it, it's not a cheap to set up. Like we're talking over 100 million, maybe hundreds of millions to set up these geothermal locations. So, well, listen, if they do a volcano mine, I think I would buy it for the lols, just out of interest. I'll probably be on the phone to you, Lyn. How do you do this? But
Exactly. I think a lot of people would.
yeah. Well, listen, I didn't think we would talk about El Salvador that much. I have got just 2 or 3 other things I do want to cover with you just before we finish. But I'm so interested in this El Salvador project and see what happens. So I'm sure we'll talk about it in the future. But I'll keep it simple. One of the things I wanted to ask you about, Microstrategy now owns over 100,000 Bitcoin. They've essentially got over 0.5% of the total supply. Should we read into that in any way? Are there any potential negatives for them having such a large percentage of the supply?
I mean, you mean for MicroStrategy or for Bitcoin as a whole?
Both.
I mean, I think their risk is that because he's continued to dollar cost average into it, even though his initial purchase was very low, but like below 11,000, his current cost base is I think in the mid to upper 20s last I checked, and so he is, say, susceptible to negative press if Bitcoin were to fall to say 20,000 or something, right? So if it
Mhm.
falls below his cost basis, he's susceptible to negative press. Now, because he owns a lot of the controlling, he owns the dominant share of controlling votes, and he's structured the debt, smartly, right? So it's not like it's all callable the second it's not really risk of near term liquidation. He can get through that, but certainly that, some of the positive press, the feedback loop he's had as his decision kind of, resulted in profitability, could kind of revert if you were to get Bitcoin falling below that cost basis. So that's kind of the risk on their end. I don't really see a huge risk for Bitcoin, to have an entity control 0.5%. We already kind of see this to some extent with the large custodians that control, more than that. All right. So they basically control them on behalf of other people. There are kind of risks to the narrative. I often kind of separate actual risks versus narrative risks. And so I've done that before with Bitcoin energy, where I don't view Bitcoin's energy consumption as a problem, but I view that the narrative around that can be a problem. And so similarly, one of the kind of the often spread around facts, people like to spread, like say Bitcoin critics will spread around the idea that, like, 90% of Bitcoin is owned by like 2% of the addresses or something like that. And they're leaving out the fact that those are generally custodian addresses
Mhm.
that are owning Bitcoin on behalf of millions of people. And so you can kind of use, and I think a lot of them honestly don't even know. So some of them could be purposely misleading, whereas actually there are other investors that I respect that I've seen share that statistic, and I just think they don't know that those are custodian addresses. And so, basically, if you start to have companies become kind of these figureheads or these large owners, it kind of can make it look more corporatized. And I think that's in some ways part of what we saw during this recent altcoin bull run is people said, no, Bitcoin's too expensive, it's boomer coin, it's corporate coin, so I'm going to go buy dog money. and and so it didn't work out. It didn't work out well for most of them, other than the ones that maybe bought before the big parabolic rise.
Mhm.
But that's kind of a risk, and so I think that there are risks related to unit bias, right? So the fact that I mean, now with the bear market, Bitcoin's unit bias is decreasing, right? But if people often either don't realize Bitcoin is divisible, or they know it's divisible, but they think it's just unsatisfying to own zero point 0.1 Bitcoin. And so I think that the kind of community shifting towards Sats makes sense, right? Because it
Mhm.
creates, it's more like kind of like how Doge is attracted to people because they could own a lot of Doge because each coin was cheap. So there is unit bias can be a real thing. But then in addition, yeah, if you have these corporations own big pools of Bitcoin, it can make the narrative, you know, a little bit more challenging. And that's kind of an inherent trade-off because in order for Bitcoin to reach very, very large market capitalizations, you're naturally going to have institutional adoption of it. But then if you get institutional adoption of it, there are risks related to capture, or the narrative kind of losing some of its steam. And so it's just something that I think the community has to always push back on and always kind of focus. And I think they've done a good job there, right? So when they saw the mining council stuff, they were like, wait, so now we're doing behind closed doors like agreements on things,
Mhm.
and they kind of push back on that. And so I think so far the Bitcoin community's been pretty careful about not having heroes, or at least when they get heroes like say briefly Elon Musk, the second they misstep, they're pushed away. And so I think there's that trade-off between these large pools of capital versus Bitcoin still being mainly a retail phenomenon.
Yeah. All right. The last thing I want to touch on you is just some general macro outlook. I've missed all of this because I really want to talk about El Salvador with you. But we did have the CPI inflation rate hit around 5%. That was seen as a surprise, not by everyone, but that was seen as a surprise. We have the comments from Jerome Powell. Jerome Powell, what's your general read on inflation right now? I saw in your update that you think for the year it will range between around, I think you said 4.7 and 5.1%. What's your general read?
Well, so so that was the May inflation reading. It
Mm,
came out in June, but it was for May. I think that the one for June that'll come out in July will probably be in that 4.7 to 5.1 range, most likely. But then after that, it's probably going to go somewhat lower in that year-over-year terms because you're looking at harder base effects, right? So the May is the peak base effect month where you're comparing it to May of 2020, which had a dip in CPI at the
right.
lowest
Okay.
point. And so as you get out to July, August, September, October, months like that, even if you still have pretty significant inflation, you'll be comparing it to those same months last year, which is when inflation was already rebounding a little bit. And so I think that the year-over-year numbers could start to relax down to 4.5%, 4%, maybe as low as 3.5%. But I kind of aim towards that 4% range. And so I think that in rate of change terms, there's a good chance that you'll get kind of a relaxation of inflation. And so we're already kind of seeing that in the media where they're saying, oh, so commodity prices are going down. This was transitory all along. And I think the key takeaway is that some of these prices will come down. They probably won't come down to where they were before this increase in the money supply. And then even when they come down, and then eventually level out, they are still at risk of price increases in the future. And so I think that, for example, when you look out either later this year or multiple years in the future, I think energy prices going up is another potential catalyst for inflationary pressures. And so this one was largely driven by food, semiconductors, and non-energy commodities. And I think there's a good chance that either later this summer or next 2, 3, 4 years that energy shortages are another contributor to another round of this type of inflation.
Okay. Right. We'll keep an eye on that. Last thing, because I don't want to keep you too long. The reverse repo market hit 755.8 billion. Two people have asked me about this. They're like, can you ask Lyn what the hell the reverse repo market is? I think you might want to explain what the repo market is first before you explain that.
Yeah, and so basically, the way I've been describing this is it's kind of the opposite problem of what happened in 2019 when we had the
Hmm.
repo rate spike. And so the repo market is this overnight lending market between financial institutions, and the Federal Reserve has these operations where they can provide liquidity to that market or absorb liquidity from that market. And so when they do a repo operation, basically a financial institution can that has treasuries can give some of those treasuries to the Fed. In exchange, they can get dollars. And so they're basically it's like a short-term collateralized loan, and they can have different terms. They can be overnight, or they can be for several days or weeks or longer. And so that's basically it's kind of this way to temporarily convert between treasuries and cash, and that makes the market more liquid. And so what we saw, for example, back in 2019 in September, the overnight lending rate, the repo rate, was super calm, and then it just spiked out of nowhere, went up like 7%, literally overnight. And it's one of those things where the average person on the street had no idea it happened, but every single person who follows macro and is any way related to Wall Street, every single person, like that was like the shock heard around the world, seeing that repo rate just spike up like that. And that marked the end of Federal Reserve quantitative tightening. So for the year prior to that, they were reducing their balance sheet, reducing reserves in the system. But starting with that spike, the Federal Reserve had to come in and start increasing their balance sheet, and they haven't stopped yet. So for almost 2 years later, and that was before the pandemic. That was late 2019. And the reason essentially was that you had a mismatch between the amount of T-bills and reserves, and so they were reducing reserves while the U.S. government was running very large deficits, something like 5% of GDP deficits prior to the pandemic. And so you had a lot of T-bills, not a lot of reserves. And so essentially what happened was that there's just too many T-bills, not enough reserves. So the Fed had to come in and say, okay, we'll fix that. We'll start providing more reserves, essentially. So they first started doing temporary those repo operations, and then they realized it was more structural. So they actually started permanently buying T-bills. So creating new bank reserves to buy T-bills and kind of resume this period of quantitative easing. Now, they've done so much quantitative easing for the past year and a half that actually now there's excess reserves in the system. So there's tons of reserves, and they've bought so many of the T-bills that there's actually now a mismatch where there were too many reserves compared to the amount of T-bills in the system available for the private sector to buy. And T-bills are really important for structural reasons for the financial system because they can collateralize them, they can do all sorts of things with them, and so basically you have an issue where if there's too many reserves, not enough T-bills, you could have T-bill rates go slightly negative. So even though the Federal Reserve is not going into negative rate territory like Europe is, they're just holding rates around zero. They saw an issue where their T-bills were kind of trying to go slightly negative just because there was essentially not enough supply compared to demand, just because the Federal Reserve bought so many of them. And so there's a couple ways they can fix that. One is the Treasury can start issuing more T-bills. They can basically, release fewer long duration treasuries and more T-bills, or the Fed can say change some of its buying patterns, or they could do this reverse repo facility where they can say, hey, we can take some of those excess reserves off your hands and give you out some T-bills temporarily. And so it's basically the opposite dilemma of 2019. And this was compounded by the fact that the Treasury general account was drawing down. And so when the Treasury issues bonds, they sell bonds, they raise cash from selling those bonds, and they have this big pool of cash. And so what do they do with it before they spend it? Well, they store it at the Federal Reserve, but it's its own gigantic account. And so if they issue bonds at a faster rate than they spend money, then that TGA, that Treasury General Account, goes up, and that basically sucks dollars out of the system because that's kind of like dollars sitting in a void, not being used anywhere else. And so that's kind of a dollar tightening event. On the other hand, if they start spending more money than they're issuing bonds for, they draw down that TGA and basically push money back into the system, back into bank reserves. And so normally that is, their Treasury General Account is a few $100 billion. Now during 2020, they brought it up to record highs of 1.8 trillion. They basically issued a ton of treasuries ahead of time, faster than they spent it, just so they had this big war chest, and they just kind of weren't spending it for a while. And so starting in early 2021, the Treasury said, okay, now we're past the crazy part. We're going to start drawing down this Treasury General Account. And so we've been in this kind of, say 4-month period of the Treasury not issuing as very many treasuries and spending rapidly, so that the TGA is being drawn down. And a lot of we basically put an extra over $1 trillion back into bank reserves pretty rapidly. And when you combine the fact there's still quantitative easing happening, banks basically literally have more reserves than they know what to do with. And so a lot of that is spilling back over into the Federal Reserve with these reverse repos. So it's the exact opposite problem of 2019. So you have too many reserves, not enough T-bills, and so we're seeing that reverse repo activity take off.
So it doesn't sound a hugely negative thing.
I mean, so both the repo spike and the repo activity, and then this reverse repo, they naturally attract like sensationalist headlines. So back in 2019, there were a lot of people saying that that there's some bank about to collapse or banks are gonna, and I kept saying no, it's literally it's there are. So you had kind of two camps back then. On one hand, you had kind of mainstream journalists saying, oh, it's no big deal, it's it's just a technical matter. On the other hand, you had sensationalist accounts saying like a bank's going to collapse. This is like 2008 all over again. And the reality was that it was basically a shift towards deficit monetization, which is a big deal, but it's not the same big deal that those accounts are pointing to. It was not a bank failure or an upcoming bank failure. And so kind of like there now, we're seeing a lot of concern about reverse repo activity, and there are some real ramifications of it, but it's not indicative of, say, some near-term collapse or anything like that. What kind of the more, I think, concerning things for financial markets is that when reverse repos first took off back in, say, 2014, that started kind of signaling the end of quantitative easing. And so when the Fed started to see that, they basically saw that there was excess liquidity, and so they eventually began tapering their asset purchases. And so in a market that's so held up by quantitative easing fiscal stimulus, when you start to see these reverse repos and the Fed starts talking about the potential for tapering next year their asset purchase rates, that certainly gives the market some jitters. And so you can have kind of plumbing issues, or you can have kind of liquidity kind of tighten up a little bit, but that's different from some sort of, say, financial time bomb about to go off.
All right, awesome. Do you want to hear what I think we should do next week?
Absolutely.
It might require a bit of homework. Do you know my good friend Nassim Taleb?
Yeah, I'm familiar with his work, but I mean, right now all of his tweets are protected, so I can't. Yeah,
you have to follow him. Well, yeah. So me and him are good friends, and he's quite hostile to Bitcoin right now, and he's written his black paper, and I'm going to spend some time looking at it. I wonder if you and I should try and dissect it, go through some of his arguments, against Bitcoin. There's a couple of things I think he makes good points because I've already had a look. But what do you think about doing that, dissecting his black paper?
I'd be happy to.
Excellent. Okay, well, I will get Ben to send you a link to it in advance, and I will give you all my kind of like the key points I think we should look at, and I think that'll be a bit of fun. Anyway, it was nice to meet you finally. Hopefully we'll do it again sometime. We get to hang out again. I think Bitcoin 2022 might be like 50,000 people, even wilder, which will be exciting.
We'll see how long the bull market or bear market goes. That could dictate how many people show up. But yeah, I did love meeting you and a lot of other Bitcoiners in the space. It's always, you interact with people online, and it's really nice to then meet them in person.
Well, I mean, it was a bit of a all-star barbecue we actually met at when we were at VJ's, which was pretty insane. But it's great. It's great to see you. Fingers crossed, Bitcoin won't be in a big bear market. I'm very excited to watch what's happening in El Salvador, and yeah, let's catch up next month and let's do a dissection of Nassim's black paper.
Absolutely.
All right, Lyn. Good to see you. Take care.
Bye.